We're lucky because the human population of most of the Western developed world is diminishing over time. It's aging and we're not replacing ourselves. So we replace ourselves with AI and machines. So we're seeing at Amazon warehouses, a third of the Amazon workforce is robots, but they're 3 or 4 times more productive than humans. So therefore we will see endless build-outs of robots instead of humans. And AI is disrupting jobs we didn't quite imagine would be disrupted first. We thought it'd be accountants or whatever. And what it ends up being is artists, creators. I mean, I just saw a website today for model agency. So I'm like, okay, I didn't expect the modeling industry to get disrupted because how many people actually go to catwalks? It's not. It's for video or photography. So it's going to change a lot of jobs. It's also going to offer a lot of opportunities. All of us will be thinking about AI strategy like in the late 90s, we were all thinking about internet strategy when we were building businesses. Fine, okay, we can deal with that. The issue is Moore's law and the exponentiality of all of this.
Need motivation?
Watch a top 10 with Believe Nation.
Hey, it's Evan Carmichael, and I make these videos because in my first business, I struggled to stay afloat. I quit on my business partner, and the thing that kept me motivated, that kept me going, was studying the stories of famous, successful entrepreneurs. And in their stories, it gave me the hope, the drive, the ambition, the thinking that maybe I can do it too, that extra bit of belief. And I still need their stories today, and I'm honored to share them with you here as well. So today, let's learn from one of the best, Raoul Pal, and my take on his top 10 rules of success. Enjoy.
So these language models, these large language models, LLMs, which ChatGPT came out with, are increasing exponentially in their power of an order of magnitude that we can't get our heads around because we think in linear terms because we're dumb humans. So these things are doubling, tripling every year or less. And this was the fastest, you've heard me use this phrase before, the fastest adoption of technology in all history was crypto, blockchain technology. ChatGPT went from 0 to 100 million users in a month. Okay, so now we've got AI that is like a virus. It is so unstoppable. And we've got 2 or 3 different people building it at scale. Google, Amazon, Microsoft with OpenAI, and then Stability AI is an open source network AI, which is almost unstoppable because it's doubly viral. Because you've got, so this is going on. The computational power is exploding. The cost of compute is going down. And what it means is that AI becomes more and more powerful. So if you listen to Mo Gawdat, and he knows because he ran Google X, where a lot of this has been incubated, they discovered DeepMind. They were the people really to build out the large language models. He says, well, right now, specific AI is better at humans in almost everything it does. So specific AI has a better result set than any radiologist on Earth.
And just for people that don't know, specific AI or narrow AI it's one task. Go get good at reading an X-ray. Go get good at playing chess, playing Go, whatever.
Correct. So, okay, fine. They think that Mo Gawdat thinks that by the end of this decade, AGI, so that's a generalist AI. So like humans or ChatGPT is a general.
You can navigate a grocery store. You can play chess. You can play in the markets.
Guess what the weather's going to be like?
Point it at anything.
Anything. You know, like I could ask you a question. You can ask me a question. So he thinks that with the computational power and the progression of where this is going, that it's almost certain that by the end of this decade, we get to the point where AI is smarter than humans. Now, we don't really worry about that because we already think it's smarter than us at doing certain things, and soon it'll be smarter than us at driving cars, and it's already smarter than us at flying planes. We just kind of take it for granted. We don't see it. But then if you get to the Ray Kurzweil singularity point, and Mo Gawdat says, okay, here's the really big problem, and this is exactly what Noah Harari says as well, is when you take it, extrapolate it a little bit further out into the future. So Ray Kurzweil's singularity moment is 2049. But even before then, it becomes 1,000 times smarter than the smartest person who ever lived.
Rule number 2 is buy Bitcoin now.
If I'm an investor who wants to, I feel like I don't have a big enough spot position in either Bitcoin, Ethereum, Cardano, Algorand, whatever, I'm looking to take out a position in. Would you say, in the next, either now or the next 3 months or 6 months is the time I should be looking to buy?
So you kind of either buy now, and this is where the market is struggling with this, because few people have flipped out because they made some money, got called the low. The people with shorter term time horizons. Others like it's overbought, but usually these kind of conditions are where you tend to get these crazy legs to the upside because everybody's underweight because everyone's got the same thing as you. Is I don't have enough spot. Oh, shit, what do I do? Then you have to FOMO in and you'll end up FOMOing too high. So this is how it is written. It is always this way. And so my best guess, and I don't know, I don't have a crystal ball, but usually because it's set up like this, the path of most pain is higher. And then once everybody goes, right, it's going, it's running, is usually when this correction happens. So do you get another chance to buy it again at these levels if you miss it now? Maybe. We don't know if it has that downward correction or the sideways correction. You will get a time to buy it after a consolidation later. But really, I would be, and this is what I've been doing, is buying. I was buying from June onwards as much as I could with any cash flow I got, because I'm still fully invested in crypto. I never sold anything, but I've been any cash flow I can, just putting it in is okay. Even now, I've just put money in recently, expecting a higher move. And then if that consolidation comes, that's when I would add some more again. So if you're a longer term time horizon player, I'm not talking about the short term. I don't know. Maybe I'm wrong. Maybe I'm right, but I don't find this a bad level to dollar cost average or just put a chunk in and realize that there is going to be times when it's going to correct again, but the low is in.
Rule number 3 is think about the future.
How are you deploying AI in Real Vision?
So the game is going to be about, this is like the internet. Because of what you said, everybody's building AI and it's going to be how you utilize it and your data set. You can say, well, everyone had the internet. Yeah, but Amazon, Google, and a few others won at this phase of the internet. So we've been given something else like this, and it comes ready trained with some stuff, and then we can build on top. So you're putting your own data in, and it's the impact theory, it'll be the Tombot. So we're thinking, okay, what can we do with AI within Real Vision by having proprietary stuff? For example, I've written 19 years of research, part of Global Macro Investor. Okay, so that's an interesting data set. There's also every transcript of every interview we've ever done, every action taken by everybody on the website, and then so on and so forth. So it's going to be about who gets the best data sets and how do you use them. My view is the best use case for all of this is to create network effects by giving the value of what we call the hive mind. So of all of the people, not just me and experts, but everybody, because they're all learning from being on Real Vision, much as they are with impact theory. So they become smarter because of it. So let's get all their interactions and give it back to them. And then eventually allow people to build on top of it.
How are you giving it back to them?
Well, because you're basically surveying all the information held within the hive mind, distilling it down and giving it back to them, as opposed to the old model, which would be monetize their eyeballs in a different way. But you give it back to the network.
Here is the consolidated wisdom of the crowd. Go forth and use this as you will.
Yes, and if you want to build on top of it, add more crowd information into it. But it's going to be the quality of the data set that matters and how people use it. And people try all sorts of different things. We're not going to use it for, should I buy the S&P today? Because A, it's a legal nightmare to do it. And B, we actually believe in giving people the knowledge.
Rule number 4 is learn how debt works.
So the big issue for me is how do you make GDP? GDP is a magic formula. It's basically population growth plus productivity plus debt growth. Those three things make GDP growth. That's how economies grow. Population growth, well, I think you know by now that almost every single population in the Western world, including Japan and China, is now shrinking. So that is an unprecedented thing for us to have to deal with. Now, normally you would have had immigration, but because we had so much immigration and wages haven't gone up, people said, okay, we can't really take immigration at that scale to drive GDP growth. Okay, So that was the decision people made, and I understand why. And it's very difficult to import a large population of people when the wages of the existing population are too low. So we can't solve population growth. It is a fixed. We know what it is. And immigration is not going to solve it. So therefore, we've got debt growth. Well, debt growth has been the engine of which we've driven everything. And we got to a point where debt is around, in the US, about 220% of GDP. That's private sector debts and government debts. So we've got to a very indebted world. Now, you can get more indebted, but I'll come into the debt side later. And it's something I've written up in great detail in Macro Insiders and Global Macro Investor. But also let's look at the productivity side. This is the only dial that I think we can actually move now. If we can't really move debt growth in any meaningful way, and we can't move population growth, then productivity has to be the answer. And that is the focus, I think, of where this is all going, solving productivity. So what is my thesis here? My thesis is that the debt service costs must be less than GDP growth. If not, it needs to be monetized. I don't think anybody else has really talked about this, but I went back and I wrote about it a lot in Macro Insiders, Pro Macro, and also Global Macro Investor in great detail. But basically, if the government is 100% of GDP in debt and the private sector is 100%, let's make the maths easy. Okay, if GDP growth, long-term trend is, call it 1.75%, maybe lower, maybe a bit higher, but it's around that. So if interest rates on the debt burden, which is 100% of GDP just for the government, is more than 1.75%, then GDP, which is all of the earnings of the economy, don't service the debt. So it has to come out of GDP itself, which means GDP shrinks or the rate of growth slows. Now, we've got an issue where we've got two sectors that are both 100% of GDP. This all broke when this started happening. So we've got two sectors now competing for GDP to pay interest. Okay, that would be a problem. We'd have a continually shrinking economy. But the Japanese figured this out a long time ago. The answer was to monetize the government side of the balance sheet. And what they're actually doing, and I think I've proven it in Pro Macro and Global Macro Investor, that all of the QE is essentially monetizing the interest payments every 3.5 years based on a cycle from the debt refunding cycle that started when rates hit zero in 2009. And that has led these 3 to 5 year debts keep getting rolled. The economy rolls over because rates get higher at the top. Rates go up at the top of the cycle. The whole economy slows down. And eventually you try and refund at the bottom of the cycle, and that goes onto the balance sheet. And the difference between the GDP growth and the size of the debt is actually what goes onto the balance sheet itself. And that seems to equate to the interest payments. So basically, government debt growth as a percentage of GDP is actually, or in total, is actually just to monetize the debt itself, to pay the interest, i.e. you're borrowing more to pay the interest, and then that goes onto the balance sheet. That's pure monetization. That is pure devaluation of a currency without anybody really understanding it. And obviously asset prices go up.
Also, to make sure you're actually taking action after watching this video, I've designed a special free worksheet just for this video. The worksheet will highlight all of the lessons learned in this video, as well as pull out our 3 favorite learnings and quotes that will inspire you to actually do something. The worksheet will also give you space to write down what your key takeaways are and your specific plan of action to make sure you're getting results. If you want the worksheet designed specifically for this video, absolutely for free, there's a link in the description below. Go click on it and start building the momentum in your life and your business. I'll see you there.
Rule number 5 is step out of your comfort zone.
Do you think your best trade is still ahead of you?
My best trade is always the same. It's in quality of life. And that quality of life is everything from friends, family, how you live, not where you live, not your material possessions. It's how you live your life. Having a lust for life, a curiosity, enjoying being outside of your comfort zone. I've talked about this before. There's your comfort zone and there's where the magic happens, and they don't overlap. It's that experience of life itself is the best trade. And the game is to accumulate as much quality of life. And that can be a walk in nature, or it doesn't have to be anything. It's not material. It's a quality of life. And if you've got that and your bank is full, your account is full of quality of life and quality of life experiences, that's the greatest trade on earth. And I'll continue to do that trade until the day I die.
Rule number 6 is study crypto.
The most important thing about understanding crypto is understanding how to price it. And how I price crypto is essentially two major factors. One is global liquidity, and I use global M2 as the main understanding of that. And then there's that's the cyclical element. And then there's the technological adoption, which is the long-term logarithmic trend. So let's deal with the cycle first. The cycle is what causes all of the pain. And I've been in this space since 2013, and trust me, I know pain. The first time I bought Bitcoin was at 200. It went up to, I think it was 1,000, then back down 85%, languished for a year or two, and then went up 10x from my entry price where I sold out. And then it came back down again after going up another 10x, then it came back down again. And I've seen these cycles. And at first, a lot of people correlated them to the Bitcoin halving cycle. And I think that's probably coincidental. And it's the fact that the economic cycle works in about the same time horizon, this 4-year period after 2008, that the Bitcoin halving cycle does, because it was born out of the crisis. And really what I think is going on is it's the debt refi cycle, because there's so much debt in the global economy. And what happens is they try and tighten rates, and then you've got to refi all of this debt, and rates come all the way back down again. Liquidity comes back. And I think the stasis, the natural tendency is for there to be ongoing stimulus, because a overly indebted economy, and if you think of GDP growth being population growth plus productivity growth, well, with aging populations, that's out of the equation. And it seems that immigration is a political no-go, particularly with real wages so stagnant. So then you've got productivity growth. Now, that's not been growing either. So the only way of funding GDP has been debt. But now it takes $3 of debt to drive $1 of GDP. We kind of get to the end game, and there's just so much debt out there, it never gets paid back. So the only way of running an economy now is allowing for the increase in debt, but what services the debt is the cash flows. So therefore, GDP growth must be higher than debt growth. If not, you need to run negative real rates. GDP growth, because of aging populations, low productivity, has come down too low to service debt growth, and therefore you run negative real rates, quantitative easing, and other such stimulus. That is the way the world works.
Rule number 7 is focus on digital assets.
It's really hard to argue that when you've just seen what we've seen in AI. And so I just want people to focus on that, drop all their preconceptions aside, all the bear fest that's going on right now, and say, I need to unf my future 10 years out. What am I going to do, Raoul? This is what I'm telling you, the best thing I can do. The other one is digital assets. I've made this super clear. I think it's the best bet in the world. I think it's much better than the exponential age bet, because it's exponential in its own right. And again, cyclical turning point on a secular trend. So very quickly, there's the chart Bitcoin. There's the logarithmic uptrend, 2 standard deviations oversold. This is where you want to be buying it. So that kind of makes total sense to me. And guess what? It's cyclical because it's cyclical based on global money supply within a secular trend. So the ups and downs in that secular trend are actually driven by money supply.
Makes total sense. All assets are the same. So there we go. Bitcoin, global money supply. Global money supply is turned up. Where is global money supply going to be in 6 months' time? Tighter or looser? 0.0 chance it's tighter, because inflation is going to fall just mathematically. So it either stays the same or it goes looser. So what it's saying is this is the point in the cycle. Crypto actually turned first. It turned first, then exponential age stocks, then NASDAQ, and everything else came in October. But crypto came, actually ETH turned in June. Forward looking, and I've been flagging this to everybody as much as I can. So I really like this. Here's the secular uptrend, cyclical downtrend. This is the point. Every time that happens, usually it's like 10, 20, 30, 50x from here, depending what you have. Bitcoin's not my bet here. I would probably choose to have Ethereum. But we'll come on to that in a sec. This is Bitcoin versus the ISM in yellow. Fascinating. Every time the ISM peaks, Bitcoin peaks, because it's money supply and the business cycle that's driving some of this. It also bottoms before the ISM bottoms. So in yellow or gold here is the ISM, and Bitcoin log trend is there. And you can see the peaks match up perfectly. Fascinating. I didn't realize how cyclical some elements this were in the log trend. I think everybody confused it for the halving cycle. I don't think it's the halving cycle at all. I think it's actually driven by this global monetary cycle, business cycle, which is actually driven because rates got reset in 2009 at zero everywhere globally. And everybody has to roll their rates. I think it's every 3.5 years. You get a peak in the ISM, exactly 3.5 years. And then there's a low, 6 months, 9 months later. And that is pretty much exactly cyclical too. And it's driven by the refinancing cycle. Mike Howell's talked about this, and I think his work is really important on liquidity and the refinancing cycle. But I think it's a bigger deal than most people understand. And again, I urge you to read the article I just written in Pro Macro, or the really full stuff I've written in GMI.
Rule number 8 is understand recession.
What's the state of macro investing right now?
So macro investing is best summed up by the word denial. So, and people will interpret this two ways. People saying, yeah, the market's denying that it should go lower because earnings are going to be revised lower and that we're going into recession. And my version of that is, yes, tell me something I don't know. And markets are pretty clever. They forward look. So when I look at the macro data, I'm expecting a recession. Now, I understand it seems a bit not very clear because unemployment's not moving yet, stuff's happening, but all my forward-looking indicators suggest that we're going to go into a recession. But what is unexpected, it looks like it's not going to last very long. So the forward-looking stuff based on liquidity, and I'll come into why this is important in a sec, is actually saying that after about April, things start improving. So we go into the vortex now of everything's going to feel terrible, the unemployment's going to start rising, all of the data is going to come out bad. But the market, I think, is forward-looking this turn in the data. And we've seen it with the Federal Reserve. The Federal Reserve kind of got to the point where we're kind of almost done. They've gone from 50 basis point rate hikes to 25 basis points, and then it'll be stopped. Last time it stopped, Bitcoin went up 300%. ETH did about the same. The rest of the markets rallied, significantly. So I think that's where we are. We're at the juncture where the markets are sniffing out the turn, that something is changing. Inflation is going to start falling, and the narrative is going to shift towards we're in recession now. And that's when everybody thinks, well, we should be maximum bearish. But actually, the markets are forward looking and start discounting an improved situation, whether it's more stimulus or rate cuts or whatever it is. At least the Fed stopping raising rates, killing all of us.
Rule number 9 is invest in new tech.
The next 20 years, the next 10 years, and maybe even the next 5 years are easily going to be the fastest rate of change of technology and change to society and human life. We don't even understand, and we'll talk into a lot of the downfalls of some of this stuff in due course. But I'm not worried about this. I'm trying to unfuck your future. Some of this is going to really fuck your future in 20 or 30 years' time. But we've got time to figure that out because it's unstoppable. But what we need to do is make sure we don't get disrupted. And the only way of doing that here is investing in it. We've talked about this exponential age thesis, all of these technologies coming together all at the same time, that's going to literally change everything we understand about
work, life, politics, culture, the lot. And human life and disease and all of this. And it's not some pie in the sky stuff. It's all happening. There's been decades of investment in this, and the products are going to start getting launched.
And rule number 10, the last one before some very special bonus clips, is be prepared.
There is too much happening in too many spaces, in every single aspect of everything we do as humans on Earth, from creating art to writing scripts for films to the medical practices, accounting, lawyers, media, literally everything. Any single absorption of knowledge has changed, but at a rate of which none of us can understand, A, how to even catch up, but how to even understand it. And when I ask Emad, who's at the bloody center of it all, where it's all going in 5 years' time, he's like, knows. It's moving so fast in so many unique ways by so many people that we really have no idea. But I think Emad confirmed my view that this is literally the biggest thing that has happened on an economic and societal level in history in the shortest period of time. And the ramifications of this will live with us forever. When I got started kind of March, I was short equity markets, betting they were going to go down. I'd started buying Bitcoin. I bought gold and I was long bonds, expecting rates to go to zero, which is essentially all played out. So it was an amazing period of time. Then we kind of settled in the trade. I closed out my short positions in equities because they're always dangerous when the central bank's printing unprecedented amounts of money. And I thought, okay, if they're printing unprecedented amounts of money, how do you capture that? You know, what's the trade to be done? And the trade was this debasement of currency and the kind of people wanting to protect their capital. So I was still with gold and Bitcoin. And basically, I just started toying around with the charts of Bitcoin versus ... and looked at anything. And it was like, well, it's actually outperforming everything on Earth. And at the time, it hadn't started fully outperforming for this cycle, the central bank balance sheets. But other than that, it was starting to break down versus gold, equities, NASDAQ, you know, copper. I mean, you name it. And I was like, I called it the supermassive black hole, that I saw that it had a high probability of outperforming literally every asset on Earth, and therefore it was going to suck in all the capital. And so I just closed my gold position, went 100% into Bitcoin at that point, and then eventually broadened out into other digital assets.
What gave you the conviction to fade the like tulip concept versus the like this is going to stick around and be a part of real macro?
So I'd written in 2013 an article about stock to flow. So I kind of thought, well, if Bitcoin is digital gold, then it should have the same attributes. So I kind of figured out on a rough kind of back of a fag packet piece, calculation is, okay, how much gold is above ground? How much gets mined? How much do we know is in discoverable sources below the earth? And then kind of back that out into Bitcoin. And I figured out with gold at the time, it's about 1,500. Bitcoin should be at 1 million. And that was, I thought, okay. So, and it was at the time, it was at 200 or something stupid. So I'm like, okay, this is the wrong price. So that was the start. I probably wrote the first ever article about the kind of macro valuation of Bitcoin. Then obviously Plan B independently and brilliantly put together his stock to flow model, which even if it's not 100% perfect, gives us a conceptualization of how this might work because of this halving and the scarcity of the asset. But it was really discovering Metcalfe's law and how it applied to networks that gave me an understanding of how big this really could be. And once you look at things that are network adoption models, you tend to find they don't mean revert like a commodity that tends to have, not enough supply, which is going on right now. Supply meets it, collapses, right? This can't happen in crypto just by definition, particularly in Bitcoin. And then when you look at it, all of these kind of events, they look like bubbles, but they're all part of an exponential trend. So once you put it on a logarithmic chart, it actually looks pretty normal. And that's how you have to get a head around it. And humans don't think in non-linear terms. It's really hard for us. So, if you take 20 linear steps out of my
office here, I get to the other side of the lounge. If I take 20 exponential steps, I go around the world twice or something stupid. So, we can't get our heads around this. But I started looking at those charts, figuring out how network effects apply to this, and then realized the only mean reversion is probably to something like the 3 or 5 year exponential moving average, and that's it. So it's just an exponential curve that keeps going, but flattens out over time as the network effects get more saturated.
Why do you think crypto is the answer to the recession?
It's not the answer to the recession. It's the answer to the future of the financial system as a start, just as a small start, is the fact that in a debt-laden society, everybody owes everybody money. And when things go wrong, you don't know who owes what to whom. And that's what happened with Lehman Brothers and many of these other things, is we don't know who owed what, because there's daisy chains of all of this debt. Blockchain solves that. You know immediately who's the owner of the asset. Also, it gets around a lot of other legacy financial problems. Ownership is one. There's problems within custody, within the deep hearts of the plumbing of the financial system, that if somebody defaults, almost everything blows up. And blockchain solves that, again, because of this ownership issue. It makes transfer instantaneous, so you don't have 2 or 3 day settlement periods. And there was a number of things. But I also understood that that's blockchain itself. But Bitcoin has these 2 attributes. One is this store of value. So it's like gold because it's a scarce asset, like artwork and other things, real estate. But it has this other thing, which is this call option on the future. What could it be? What could it be used for? What could this technology be used for? And that's really the network effect that is Bitcoin. And it's the same for the whole crypto space. So if it really was going to be a store of value and the central banks were printing an unprecedented amount of money, then like equity prices, real estate prices, gold prices, it should go up in value. But it should go up a lot more because it has this call option on a potential future financial system too. So that was really what I saw. And the chart started playing out exactly that way, where Bitcoin started outperforming every other asset on earth, and it became no point to own any other assets. Now, this year has been less that. Bitcoin has kind of kept pace with other assets, but in a weird way, it went up a lot first and then came down a lot. But over time, it's generally outperformed everything. What gets worse about this is this affliction, this crypto affliction we all get, right? The rabbit hole, as it's known. You start with understanding money, which most of us don't think about. Then you kind of understand how we're getting screwed by central bank printing and the debt-laden economy and what it means. And then you start saying, oh, okay, but that's Bitcoin. And then what's this Ethereum business? And then you start realizing decentralized finance. And you're like, it's kind of a finance thing, but that's kind of cool because I can get yields now. I can get, instead of getting 0 on my bank account for my hard savings, I can now get 6% a year. Wow, that's a difference. It's like going back 25 years in time. And then suddenly NFTs come and community tokens, and suddenly your mind is completely blown that this is not just money. It's the entire exchange, transfer, and storage of value for the internet. Whole business models are about to change massively because of what this technology unlocks. And then once you get your head around that, you're like, oh God, I can't even hold this in my mind any longer. It's so big. And that it's not just buy some Bitcoin, I'm going to make some money over time. It's actually an entirely parallel financial system and business structure for the world. And it's being adopted faster than anything we can ever imagine. How did I get here? And my journey was, I was macro for 30 years. It was 1997 where the world changed. 97 and 98 was the Asian crisis. The Asian crisis was a sovereign debt crisis and a corporate debt crisis that wiped off the value of Asian stock markets by 90%. Currencies collapsed 80%. It was a total wipeout of wealth in Asia. And it was driven by debt. The answer to 1997 and 98 was to cut interest rates. long-term capital management, the giant hedge fund blew up at that time as well. The answer to that, because it could have taken down the financial system, was to cut rates. That led to, firstly, a massive rally in equities and pouring of money into the internet boom. So that was a VC-led rally plus all the stocks. That obviously ends up morphing into where we are today. Crypto could not have happened without the internet. But what happened over that period is a massive debt bubble in property. So the debt bubble continued. It, in fact, accelerated. Then it blew up the entire world's banking system in 2008. Nobody knew who'd owned what. So when Lehman went under, everyone's like, well, I don't know. How do I get my stuff back? And they're like, well, it's not your stuff. It's been rehypothecated 37 times. So you can fight it out in courts. And oh, by the way, it's held in the Cayman Islands, London, New York, and Hong Kong. Figure it out yourselves. Right? That was the mess we got into. And people got wiped out. Then we cut interest rates to zero and invented quantitative easing, which the Japanese had been kind of trialing beforehand. So now we're pushing money into the banking system and we have rates at zero. And so humans being humans go, well, great, we'll just borrow more money. And they just keep borrowing money. So all of us in macro have been watching this and talking about it for a long time, 20 years, long time. And we knew, business cycles only come along once every 5 to 8 years. And it all comes to a head in a recession. So 2008, you kind of knew was coming because of what had happened in 2000 and what had happened in 97. And the piper was going to get paid. And the central bank figured a way out of it. Then suddenly, this event happens last year. There was going to be a recession, but the accelerant was the pandemic. So it blows up everything. And the world could have blown up again, right? Everybody should have gone insolvent because the world shut down for a year. But the government just said, no, here, take free money and the central bank will just print it. So we now know what it's doing to the value of our savings because these assets are going up. We're actually getting poorer in our future selves. And so the macro guys start thinking, well, how the hell are we going to get out of this cycle? It's either going to blow up spectacularly, but the odds are getting less, or we're just going to get poorer slowly over time. So it's a matter of how fast you figure out what's going on. So once you figure out what's going on, you look at crypto and it solves a lot of this. So when Bitcoin first comes along, it's clear it's developed solely for this job. I mean, it's very clear in the white paper, and it's very clear when they're looking at the banks being bailed out again, that somebody figures out, why don't we try a scarce digital asset and see if that works? And then about a year or two after that, people start figuring out, oh, blockchain. Oh, that kind of is interesting, but other stuff, because we've got now a trusted ownership structure, which the world didn't have. Then Europe blows up in 2012 as well. We almost lost the whole of the European Union and all of the banks. So we kind of know it's a big problem. And then Ethereum comes along with smart contracts. And then the kind of light bulb moment for everybody goes off is like, actually, we can rebuild the entire system from scratch. So as a macro guy, when you know you've got something fundamentally broken and there's only one set of outcomes, which is printing more money, we've got this low growth from this demographics and technology and all of these things that have been changing the world. So we've got low growth, massive debt, makes it hard to service the debt, increases the amount of printing. So therefore, these assets go up. But the real macro opportunity is to invest in the new world.
What is it that makes Bitcoin interesting enough that so many smart people see this as ultrasound money? And what does ultrasound money mean?
The world has a history of money, whether it's backed by gold or not, where government gets themselves excessively into debt and they devalue the money. So the Romans used to clip the edge off the coins so there was less gold in each coin. And eventually people would lose faith in the coins because they blend them with silver and then blend them with copper. And, the coins were worthless because that was supposed to be worth the value of the denarii in Roman times. But governments can't help themselves. Humans, we're just humans, right? Humans are fundamentally flawed creatures and we always will be. So then we have these gold standards. The US and the UK were on gold standards. World War I, World War II, we all have to leave it because we've got too much in debt again. We've overly financialized yet again, because humans love leverage above all things. It's kind of sex and leverage are the two things that drive humans for some reason. Then we adopt a new system, which has been around before, but it keeps getting abandoned, called fiat money. Fiat money is money not backed by anything. It's backed by the promise of the central bank paying it. So that's the dollar bill that we all are familiar with, and every country in the world now adopted fiat currency. But as with everything, if you're really thirsty and I gave you a bottle of water or sold it to you, you'd probably pay me 10 times too much for that bottle of water. If I give you 1 million bottles of water, they're worth precisely 0 to you. So scarcity has value. That's art, that's cars, that's almost anything. Humans value scarcity for whatever reason we do. And so if you're printing too much money, you're creating less scarcity. So yes, there's money everywhere, but the money has less value. So once you understand that, you say, well, what does it mean? The dollar hasn't collapsed. It's kind of where it was versus the euro in the last 5 years or whatever it is. And then you say, but my $50,000 salary now can buy me much less shares in Apple, Amazon, Google, Microsoft. In fact, units of the S&P 500, I suddenly can't buy as much. Since 2008, it's a fraction. I can buy like a third of what I could. Same with real estate, same with gold. And then you're like, assets have suddenly got expensive. They haven't. The value of your savings has gone down, or your money. So you can't afford to buy assets. What is an asset? An asset is deferred consumption from the future. I buy a house, I sell it in the future, I get to retire, whatever the things are, right? We don't buy the S&P because we want to hang it up in our wall. We buy it because we want to sell it at a future date to realize money. So that means our future selves are now poorer. That's essentially what this means. That's what currency debasement is. So Bitcoin comes along in 2008, in the middle of the crisis. It's kind of like it was perfectly prepared for this and said, Satoshi goes, hey, look at this. I can create an algorithm that only creates so much of this thing, the Bitcoin, and it can never vary, ever. So therefore, this is scarcity that humans can't fuck around with. Now, humans have this propensity to fuck around with scarcity because they're economically incentivized to do so. Here they can't. So then they become economically incentivized to own this asset because it's scarce and it cannot be changed because it has this consistent supply curve and a limited number. So Bitcoin becomes this great store of value. And it would look like gold because gold's a good store of value. It's worked for thousands of years. But Bitcoin has this other thing to it. It's a network, which gold isn't, and it's technology, which gold isn't. So we have use cases and the benefits of building a network. So suddenly it goes up exponentially in price. Roll on to 2015, and suddenly somebody's looking at the blockchain and they start saying, imagine if these bits on the blockchain, which is where you record the ownership of something, in Bitcoin, it's Bitcoin itself. What happens if we could put a contract in there? Because humans live off contracts. You know, everything is basically a contract in our legal terms. And that was the rise of Ethereum. It became a platform where you could programmably change the blockchain. Not the attributes of the blockchain. You couldn't remove anything off that ledger, but you could change the little holding buckets and say, well, it can look like this, it can look like that, it can adopt to this. And those things were verifiable as well, so they couldn't change. So this created Ethereum, which became the platform. So if you think of Bitcoin as this store of value, this very pristine, beautiful thing, then you think of Ethereum as also a very beautiful thing, but it's a much broader application because it's like programmable money.
What have we seen over the last 9 months in the macro story of crypto? Has there been more of that convergence? Are they now close to one and the same, or what's changed?
So I think they're the same. So if I go to my peer group and the people I really respect from macro hedge fund space, right? So that's the pointy end of macro. Those are the guys. Almost all of them have transitioned across in one way, shape, or form, either entirely or partially.
Really?
So very
is that like
famous.
the last 9 months? Or how long
it's been
has
happening slowly, but it's increasing. It's going exponential as all these trends do. So, people like Alan Howard, who's one of the world's most famous macro investors based out of the UK, he personally is entirely crypto now. Dan Tapiero, good friend of mine, he's entirely crypto now. I'm pretty much entirely crypto. Certainly my investments are. I still look at them whole macro world. But one after the other, they're all seeing the superior returns and a solution for the set of macro problems. So macro guys generally tend to be pretty pragmatic. We've got a set of problems, solutions, what's going to make money, allocate capital accordingly. But everybody's going, well, this is the biggest opportunity we've ever seen, because everybody starts on the Bitcoin journey and ends up having the holy moment that everything is about to change. And I'm sure we'll talk about a lot of that later. So I think macro and crypto have merged. What you're seeing now is you're seeing a lot of noise from the latecomers to macro. People who only know either the latecomers from macro or the ones that have been around very long and are anchored to gold and certain kind of mean reverting ideas. What you're seeing is a fear of change. So the noise that you're getting at the periphery, the Peter Schiffs of this world, for example, is not that Peter Schiff doesn't understand that crypto is the future. It's that he doesn't want it to be.
Because you made it this far in a video, I want to celebrate you. Most people start and don't finish. Most people never actually follow through. Most people say they want something, but they don't ever do the work to actually get it. But you are different. You are special. Believe Nation, you made it here all the way to the end, and I love you. So as a special celebration, if you put a hashtag believe down in the comments below on this video, I will showcase you and celebrate you somewhere on the screen in a future video, because you are awesome.
For 10 more amazing rules from Michael Saylor, check the video right there next to me. I think you'll love it. Continue to believe, and I'll see you there.
Anybody thinking about it for even a few seconds realizes that if there's a taxable event every time I transfer it to you, it can't be a currency. 7.8 billion people are using